and begin patching up and editing from as soon as I say okay. Okay, so this portion that we're going to begin now is going to be your escrow, or what they call trust accounts. Okay, so we need to make sure before we begin this portion that we make a distinction, okay? Because some of you guys may have some experience in the real estate world, whether it be from being agents in the past, from being investors, for purchasing properties, from selling properties, who knows? Some of you guys have no experience whatsoever. So the one thing you need to understand is that in the real world, remember, we are sticking to theory. This is not what we do in the real world. And the minute that you start thinking like the things that we do in the real world, you will fail on this exam. Because they are not, again, they're sticking to theory. We do things differently once we're out on the field and actually doing business and transacting. So we got to stick to the theory. So now, for those of you guys that have closed properties, what is it, what entity do we use, or what kind of a service do we use to close deals? That is going to be your title companies or your attorney's offices. Now, for the sake of real estate, yes, we have those available, but for the sake of the exam, you need to know that every brokerage also has the right to do their own closings and run their own escrow accounts and transactions themselves. Now, under that condition, it puts all the liability on the brokerage and on the broker. Yes, they can charge for those services, but it could completely derail the deal if their processes, they don't have people in place that can close the deal. Because whenever we're dealing with title companies, what do? They do the title searches. They make sure that the title insurance is there. They make sure that that title is clean and is able to transfer hands once the timing of closing. And they collect all the documents from the lender, from the surveyor, from the appraiser, from everybody else to make sure that the deal closes. But the issue is that if the broker runs their own transaction and does not utilize title companies, that is where we are going to be tested from. So from this moment forward, for this exam, forget title companies or attorney's offices ever existed. Because if you're on the exam thinking to yourself, crap, when we closed that deal, what was it that we did? You're instantly in the wrong path. And you're instantly going to get the wrong answer because you're relying on prior information on the title company, when I'm telling you that that doesn't exist for the sake of this exam. The broker and the brokerage themselves are the ones handling the transaction, the closing part. So again, and I'm going to repeat it one last time, forget title companies and attorneys' offices exist for this exam, because you're not going to be tested on that. So stick to what we're about to learn now. All right? Question: what is an escrow account? Let's go in simply. What is a trust or escrow account? Remember, we want to set foundations. And the crazy part is sometimes those simple questions tend to be some of the hardest to answer, because we'll come up with a bunch of different things that we already heard or know, but we can't come up with a simple definition. So again, what is an escrow account? 3, 2, and an escrow account, all it is an account that a disinterested third party uses to hold monies for people in the transaction. So in this case, it would be the broker that holds that money for the buyer and the seller. Where in real life is the title company or the attorney's office that you would put your deposit and they handle, and they have those escrow accounts, but they're the disinterested third party. So that way there's no conflict of interest and nobody has access to those funds. Okay? Now, the deposit, there's many different ways to call or call a deposit by its name, because a deposit can be called an escrow deposit. It can be called an earnest money deposit. It can be called a binder deposit. It can also be called an EMD, or it could even be called a good faith deposit. all those names are technically correct, and they can test you in any of them on the exam. So you better make sure that you know the different variations that we use to call a EMD or an escrow deposit. And once you get the license, it don't matter what you call it as long as everybody understands what you're talking about. But for the sake of the exam, you gotta know that they're all the exact same thing. EMD, escrow deposit, earnest money deposit, good faith deposit, and binder deposit are all the exact same things. And they will use them interchangeably, because in one question they'll say, Coach Rich did this, this, and this, and all of a sudden he had a binder deposit of $5,000. And then another question they'll say, Sandy had a good faith deposit of $1,000, blah, 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 blah. And another one they could say, Joanne is getting a loan for $300,000 at 5% with $2,500 or $2,500 in EMD. We've said the exact same thing, all deposits. Okay, so make sure, please, that you know the difference. Next, acceptable depositories. Okay, so an acceptable depository is essentially an institution that you can open these escrow accounts in. And there's going to be 3 in specific across the entire chapter in the book. So anytime that you see acceptable depositories, whether it be for escrow accounts, for mortgages, or anything like that, across the entire course, there will always be these 3. So that's a hint. So that way, if you get asked in a different chapter, don't get confused. It's still the same 3. So that's going to be commercial banks, savings associations, and credit unions. I'm going to repeat that again. Commercial banks, savings associations, and credit unions are going to be the acceptable depositories or institutions in which you can open escrow accounts. Again, they're the same 3 for everything else, mortgages or anything whatsoever in the entire course. There's your hint. All right? When it comes to the deposit in itself, okay, the technical definition of when that deposit needs to be in the escrow account after the buyer gives it to the agent or to the broker is immediately. So technically, the broker needs to immediately deposit those funds into the escrow account. The issue with the definition of the word immediately is what? That means at this exact moment. But if we really think about it in the sense of efficiency, it makes no sense whatsoever, or it's actually impossible for every broker that handles these transactions that the minute that they receive an escrow deposit, they're going to drop everything they got going on, meetings, whatever, to run to the bank to then deposit those funds in those accounts. It's never going to happen. It's not realistic. So the term or definition of immediately has a sub-definition. So when they mean immediately, they mean 4 business days. So essentially, the broker is going to get a grace period of whenever they receive that deposit, 4 business days to make sure that it's in the escrow account and it's still categorized as immediately. Okay? So again, 4 business days. 1 business days is accounted from when the buyer gives the deposit to the sales associate, and then 3 business days for the broker to deposit it. So again, 1 business day from sales associate to broker, and then broker to account or to escrow account is going to be 3 business days, meaning it will be a total of 4 business days. And be careful here, guys, because it will always be 4 business days no matter what scenario they give you. If all of a sudden they say, John's buying a house, went under contract, came into the office, and gave Ricky his deposit, the sales associate, on Monday. Ricky gave the deposit to the broker on Tuesday, and the deposit went into the escrow account by Thursday. Everything is great because 1 day for the agent to the broker, and then 3 days for the broker to deposit it. So the deposit came in on Monday, By the end of the fourth business day, which is Thursday, is when it needs to be in the escrow account. But now let's say that they decide to throw you a curveball on the exam. And rather than include Ricky, they said John came into the brokerage office to deposit his escrow funds. But his sales associate Ricky wasn't around. The main broker happened to be walking by, asked him what he needed, and he explained. So the broker said, hey, look, why don't I take it, since Ricky has to give it to me anyway and I have to go deposit it in the bank. That way we don't have to, we can just knock that out real quick. And the buyer said, okay, great. Now, if that happened Monday, when does the money have to be in the account by? Now, if you're saying Wednesday because Ricky wasn't in the mix, you're going to get caught in the trap, because it's not 3 days. It's always 4 days, no matter what. Always, always, always 4 business days, whether the sales associate was in the process or the broker themselves received it. Okay? So again, never count 3. Regardless of what they tell you, it's always 4 business days, unless they bring you this question, which should be in your exam. They're going to say, what is the best answer? If they include the term, what is the best answer, technically there's going to be 2 correct answers. Because if we use that same scenario, let's say that John came into the brokerage to look for Ricky to give him his deposit, but the broker walked by, took the deposit because Ricky wasn't in the office. When does the deposit have to be in? What is the best answer? Now you're going to get Thursday and immediately. Technically, they're both right, but what is the best answer? The answer is immediately, because under that condition, even though Thursday, it is correct, because we already established it's 4 business day grace period, the true definition of when that deposit needs to be in is immediately. We just established that it's impossible or not realistic, so that's why they give the 4 business days to count as immediately. But again, if the word immediately is there and they include the best answer, there's going to be 2 good answers. Thursday and immediately, but you got to go with immediately, because if you pick Thursday, you're going to have it incorrect, even though you're technically correct too. So be careful with that, because that's how they try to trick you. Keep that in mind. Okay, guys? So now we move to the timeline. And I'm going to make one recap. So if the deposit comes in on Monday, it's got to be in by Thursday, 4 business days. If it comes in Tuesday, it's got to be in by Friday, 4 business days, regardless of how it works. If it's Wednesday, then it's Monday, because holidays and weekends do not count. So it's only weekdays. So Wednesday, Monday, Thursday, Tuesday, Friday, Wednesday. Again, one more time. Monday, Thursday, 4 business days. Tuesday, then Fridays has to be in, because that's 4 business days. So Wednesday is got to be my Monday, Thursday by Tuesday, and Friday by Wednesday. Okay? Make sure you know that, because that will be a question on your exam. Okay? Next, do you guys believe that a post-dated check or a check with insufficient funds can be used as an escrow deposit? Do you think that would be a yes, a no, or it depends? Well, if you went with depends, that is the right answer. A lot of the stuff in this real estate industry, guys, it's not black and white. A lot of the things has that gray area that, depending on certain criteria or situations, things are permissible or not permissible. For example, this insufficient check, as long as the seller agrees that they don't care if the funds are insufficient, and they're willing to sign something relieving us of any liability, we can make it happen. It doesn't make a difference. The buyer say, hey, I don't got the funds yet. They don't come in until this day. I'll make the check for that day. The seller say, hey, I don't mind waiting. No problem. And sign right here. They sign. Boom. Insufficient check. Good to go. And the only trick to that, though, is that since the check is insufficient, now it puts a little liability on the broker. because now the broker must hold the check separate in a safe or in a place where it's not going to get lost. And then the broker then has to deposit it to the escrow account on the day that it becomes due. So there's enough funds in the check and the check won't bounce. So that's kind of the only crappy part for the broker, that they have a little liability and they have to make sure they remember to deposit it on that day. But technically it can be done. All right? Also, now we're going to move into the management of the escrow accounts. Okay, so the broker of record, which is what we call the proper term for the main broker or the owner, is, or not necessarily the owner, the broker that operates the main broker of the brokerage, because you can have owners and then establish a broker to operate the business. But ultimately, they got to be signatory on the escrow account, because every single month, that account needs to be reviewed, signed, and reconciliated, so the broker, there is consistent monthly signatures on those items. Okay? And that's why they got to be reconciliated to be balanced, so there's consistency to the numbers. Because otherwise, when you got a company that has hundreds of transactions running all at the same time, it can get very messy. Do you guys believe these escrow accounts can be interest-bearing escrow accounts, meaning that the account creates interest? Do you think the answer is yes, no, or it depends? Well, if you went with it depends, then you're right again. Because ultimately, again, there is no black and white. There's that gray area that if it gets disclosed where the interest is going to go, and everybody involved in the deal is in accordance and we get signatures, then we can have interest. But the rule is that everybody has to know and agree as to where the interest is going to go. Who's going to receive it? Is it going to be divvied up? Or however is worked out, as long as everybody's okay with it and everybody signs, you can have interest on that escrow account. It can be an interest-bearing account. Okay? Then the monies to maintain the escrow accounts, because looking in the next terms, if you look at your study guide, you'll be able to see the two terms that follow: commingle and conversion. What are those terms? Well, commingle, think about the name. Co-mingle, meaning what do you do when you're mingling? You're, talking to people and chatting and going here and going there, and similar idea with personal money from the broker and escrow money. You cannot mingle or mix monies. That's illegal. That is what is called, that is again, commingling. It's a violation. So the minute that you mix personal money with escrow money, automatically violation. Do not do that. Now, there's the other term that I want you guys to think about these terms and put them together. Commingle and conversion. Commingle, again, is mixing the monies. Conversion is actually the usage of the money. So as opposed to just you putting money into the account, you're actually using it for something, even if you're going to replenish it the next day or reimburse it. That's illegal. So obviously conversion is a bigger violation than commingling, because you're actually using escrow money for personal use, and that's a no-no. All right? So when it comes to these escrow accounts, now that you know that we technically can commingle and we can't conversion because we can't use the money, the law does allow us to hold or at least keep some personal or reserves of our personal money in these escrow accounts in case of emergencies. But again, they're limited because it's for the point of reserves. So ultimately, what we want to know is how much can we keep in those and what type of accounts can we have, so that way we know the set limits. Because technically you can have two escrow accounts. You can have a sales escrow account and you can have a property management escrow account. A lot of brokerages have property management divisions where they have a property manager that handles the daily operation of the rentals for the business and the brokerage. Well, since you do have sales where you do buying and selling, and you do property management, well, you technically can have two separate escrow accounts for those operations. If you were to have two, the amounts are $1,000 for the sales escrow account and $5,000 for the property management escrow account. Now let's put some logic into these limits, because if you really think about it, why would they allow you to put $5,000 on a property management but only $1,000 on the sales escrow account? Take a second and think about that. Why do you think that they would allow you to put $5,000 on a property management escrow account as opposed to only $1,000 for the sales escrow account? Well, the reason for that is that depending on which one it is, there could be issues that need to be resolved that require more money. So think about it logically. If you're selling properties, just outright selling and buying, there's not going to be that many issues that you're going to have to resolve, because it's a simple transaction where the buyer is bringing the money, the seller is signing, and it's a swap. But the problem with a property management side is that you're actively managing the property on a consistent basis and on a monthly basis. So you could have potential issues like one of the appliances broke. There is a leak and now you need plumbing. The electric went out and now you have to call an electrician. All those little nuances, the tenant is going to call the property manager, and the property manager, depending on what it is, needs to resolve those issues. Now, if you don't have any money on that escrow account, or you don't have enough to resolve those issues, there's going to be delays, because now they're going to have to contact the seller. The seller has to make sure that they provide the funds, so then they can do whatever needs to be done, when a lot of the times the sellers might be absentee owners and they're busy or traveling or whatever, and now the tenant's the one that's going to end up paying the price, because until they pay, they're not going to get the service. But if there's $5,000 in that account, $5,000 should resolve the majority of the quick little problems the property manager would have to face, such as calling an electrician, calling a plumber, getting a new appliance, getting something resolved, so then later they send the bill to the landlord, for the landlord to now reimburse whatever needed to happen, but at least they were able to resolve for the tenant quickly. That's why the property manager has 5 versus the sale only has 1. So keep that in mind and use that logic, because again, property manager do have a lot more issues that they deal with on a daily basis from tenants. Okay? So, do you guys believe that you can combine these escrow accounts and have one as opposed to 2 separate accounts, like the sales and the property management? So do you think you can, you cannot, or it depends? Well, in this case, the answer is yes, you can. You can have them together. Okay, now the one thing that you do need to understand so you don't get caught up in the trap is that if you choose to keep them together, the total amounts of reserves you can keep on them doesn't add. So you will not be able to have $6,000 in the account, even though they're for both. Each account always has a maximum of 5, no matter what. So if the broker decides to combine those escrow accounts, keep in mind it will be way more difficult to maintain, but it's one account. At that point, it's only $5,000 max. On the exam, you're going to get a question like that, because that appeared on mine, and they put 1, 3, 5, and 6, hoping that if you're like, oh, well, because the question could say, the broker for this company, ABC Realty, has one escrow account where they handle the property management and the sales accounts, escrow accounts for their transactions. By law, how much money in reserves could the broker have? They could say 1, 3, 5, and 6. If you don't know that the max is 5 no matter what, you could say, oh, well, the sales is 1, the property management is 5, you combine them, it's got to be 6. They're waiting for you to make that mistake, because I'm letting you know now, max is 5, whether it's separate or whether they're combined. But if they're separate, then the max is of 5 still applies for the property manager, but the sales account is only $1,000. One more time, they do not add up. If they're combined, 5 is your max. If they're separate, it's 5 and 1. All right? Make sure you know that, guys. Don't get caught up. Next, we also need to understand, too, that you could technically get a bookkeeper to handle these escrow accounts. The only issue with that is that if the bookkeeper makes a mistake, all the liability falls on the broker. So that's why a lot of the times, unless you have a broker that wants to do that portion, we utilize title companies and attorneys for that, because that liability can be very, very high depending on the operations of the brokerage. So that's why 80 to 90% of all brokerages utilize title companies and attorneys, because that is what they focus on. But some don't. Some have in-house title companies, or they do it in-house. So that's what this is for, and that's what we're going to be tested on again. So record keeping and retention. All these records and everything, documents, contracts, will all be the same across the board. We must hold it for 5 years and 2 years after litigation, or 2 years after litigation, because sometimes a lawsuit could go for more than 5 years, or it could be at a point where it could be also not only more than 5 years, but it could also be in a scenario where it's way past when the deal closed. Because let's say if there was a forgery or something along those lines, and there was a lawsuit that was filed 3 years or 4 years after the deal closed, technically we have to hold it for 5. So if a lawsuit happens within those 5 years, and then the lawsuit and the litigation extends 3, 4, 5 more years, even though we've passed the original 5 mark, once that deal comes back from litigation, we have to hold it for 2 more, no matter what. So keep that in mind, because it's, again, 5 years and 2 after litigation. If you want to rewind this so you can get clear, go right ahead. But again, it's 5 years and 2 after litigation, regardless of the case. Okay? Also, we have what we called a term called conflicting demands. Think about the name. Conflicting demands. What have we been talking about just now? We've been talking about the escrow deposit and holding escrow accounts. So whenever you think of the term conflicting demands, what do you think it's happening? Well, let's break down the terms. If there's a conflict, we have a problem. And if there's demands, people are kind of coming at each other, demanding things, and which created a conflict. And what have we been talking about? The escrow deposit. So putting it all together, what do you think has happened? They're fighting over the deposit. Something happened along the line where somebody broke one of their contractual duties, or the deal's not closing, or something happened or transpired that now the buyer wants their deposit back, and the seller's saying, nope, I'm not going to give it to you back because it's not my fault and I took the property off the market. Now I want that deposit for reimbursement for my time, my potential expenses on the transaction, depending on what point this happened. So if that was the case, then we have what we call settlement procedures. Okay, so settlement procedures are exactly what it sounds like. Are procedures to settle the matter that the broker has to implement within 30 days. We have to implement and solve within 30 business days. And we have 4 that we can opt from. Okay? First one is going to be mediation, followed by arbitration. Then we have litigation. And lastly, we have what is called as an EDO, or escrow disbursement order. All right, guys? So, first things first, to make this easy and break it down. Mediation and arbitration are the exact same things, except one major difference. Whenever you think of the term mediation, what do you think about? Take a second to figure out, what do you think about when you think of mediation? What picture comes into your head? Now, in my case, I think of divorce automatically. Not for one good reason or a bad reason, or it doesn't matter. For some reason, divorces, and I imagine somebody sitting at the end of the table and, two people kind of going back and forth. So that's what I think of when I think of the term mediation. So essentially, arbitration is the exact same ordeal where it's a disinterested third party, listens to both sides of the story, and comes with a verdict or a determination for both mediation and arbitration. But the biggest difference that we need for the exam is that arbitration is binding and mediation is non-binding. Meaning that if you're going into arbitration or mediation, you're going to sit before somebody and you're going to explain your case and they're going to listen out and come with a verdict. Now, if we decided to go mediation, they're not going, you have the right to say, whatever that verdict is, I don't agree, we're going to court now. So now you got to take it up a level to go to litigation now. But under arbitration, you have to sign prior to going into the meeting that you agree that whatever that disinterested third party says, now that will be a binding agreement and you have to abide by that verdict prior to getting in to the arbitration meeting. So again, mediation and arbitration are the exact same thing. One is binding, which is the arbitration, and the other one is non-binding, and you can go to court from there, which is mediation. You're just trying to mediate things to see if you can come up with an agreement. Arbitration, whatever they come up with, that's going to be what's going to happen. Now, for those Spanish speakers, think about when it comes to arbitration as el árbitro, meaning that when el árbitro says something, that's what goes. I don't know if that may help you. It kind of helped me out because I speak Spanish, so, but that's just a little extra hint. But as long as you know if we're mediating is non-binding, then you should be good because by implication, you'll know that arbitration is the binding one. Okay? So those are going to be our two first methods to resolve or settle these conflicting demands. Number 3 is going to be litigation. And that is exactly what you would think litigation is a lawsuit where we now go to court and the judge will decide. Under litigation, there are technically two processes that can be followed though, okay? First, we have what we call interpleader. The other process is called declaratory judgment. Now, under interpleader, once they begin the, lawsuit procedure or whatever, at that point, the broker says, hey, you know what? I have no more to do, because remember, the broker is the one handling this conflicting demands. But since they opted to go to the court and file a lawsuit, if the broker has no claim in that deposit, then he'll let the court system handle the process from there on out, because there's nothing he needs to handle moving forward from there. So what we need to understand is that we, as brokers, if all of a sudden we feel like we want a part of that deposit because let's say one of the customers, or let's say the seller decided to not sign now, or the buyer decided to not sign now, but we did our job. And we spent all this time, all this effort, all this money into advertising and doing what we're supposed to do, and we're supposed to get paid. But we're not going to get paid now because somebody broke the contract. Now we can sue for our commission or that deposit. So under that condition, we can technically go through the declaratory judgment and also make a claim on that deposit. So now, as opposed to just the buyer and the seller fighting it out for the deposit under interpleader, now if the broker does have a claim, it will be called a declaratory judgment because it's a battle of three now. It's the buyer, the seller, and the broker. Okay, so definitely make sure you understand the difference between interpleader and declaratory judgment. And then the last settlement procedure is going to be called an escrow disbursement order. Okay? To make it easier for you guys, let's look at the name. Escrow disbursement order. exactly what it states. It is an order that we use to disburse the escrow fund. And what is the institution that governs the real estate industry that has the authority to provide these orders? Well, that's going to be FREC, the Florida Real Estate Commission. So the way that last four procedure works, you send what is called a good faith doubt to FREC and let them know, hey, look, this is the scenario. I'm not 100% sure which route I go because it's kind of a tight deal. What do you guys think I should do? So now FREC will study the situation, and then they're going to send me the EDO or the escrow disbursement order and say, this is what we think you should do. And now, as the broker, you'll do exactly what FREC says. Give the money to this person, give the money to that person, split it however, but you'll have your disbursement order. So that's going to be number 4, all right? So remember, number 1, mediation. Number 2, arbitration. Same exact thing. One is binding, one is not. Then you have litigation when you're going to court now, lawsuit. Interpleader, broker wants no part of the deposit, so buyer and seller are fighting it out alone. Declaratory judgment, the buyer or the broker is also making a claim on the property or on the deposit. So now it's going to be a three-man battle for that deposit. And then lastly, we have your escrow disbursement order, where with a good faith doubt, you let FREC know, and FREC gives you the order to disburse those escrow funds. Now, this is a perfect example, now that we're here, to point out the little technique that I told you before. Use the terms within your own explanation to make it simple. In the sense, look at the name, escrow disbursement order. How did I explain it to myself in my own head? It is the order to disburse the escrow funds. I don't come up with some random explanation that I might come up with, because then I have to remember 2 things. But if I remember that the escrow disbursement order is the order for disbursing the escrow funds, my definition will tell me what the term is. So if I ever think about, what is that form that is used to disburse the funds, or what is the order to disburse the funds? Oh, it's in the name, escrow disbursement order. Instantly, it'll be a lot easier for your brain to pull that info, because you drilled it in your head that the definition is the terms within the actual name of whatever the term is. Okay? So keep trying and practicing that, because that will give you a big leg up to remember a lot of info. And as we go through the course, I'm going to keep pointing it out. Hopefully I can keep drilling it in your head and facilitate your process of study. Right? Also, monies paid in advance. If there's ever any scenario where somehow you get your commission paid ahead of time, by law and technically, we're not supposed to deposit any of those funds into our personal or operating accounts until the services have been rendered. So until you've provided the services, you technically cannot deposit that in your account, because the job hasn't been done yet. So make sure you know that if you get paid in advance. If you're looking at your study guide, if you're looking at the next section for rental information lists, that is not on the exam anymore. Okay, so if your particular study guide has that section in it, remove that or scratch it out. You're not going to get tested on that. So don't worry about learning that portion. But if you have the new version, don't worry about it, because it's not even going to appear on yours. All right? Then lastly, pretty much before we finish this portion of Chapter 5, we're going to be touching up on antitrust laws. So the antitrust laws are laws put in place to protect competition and fairness in the industry. So 2 particular terms that we need to know here. First is going to be price fixing. Price fixing is when 2 brokers conspire to set a commission when a commission should be a negotiable fair market deal where now everything is negotiable. The minute brokers start establishing set rates that cannot be negotiated, technically that is price fixing. You cannot do that. And then lastly, on that section, you have market allocation. What I mean by market allocation is that let's say you designate 2 areas in your town and you partner up with another agent, and then all of a sudden you guys kind of divvy up territories, but none of you guys can go in each other's territory. That's a no-no. Meaning you can designate territories and each of you guys work each other's, like everybody's territories, but you can legally go into each other's territories if needed. You cannot do the whole, hey, look, let's play 50-50. I take this side of town, you take that side of town, but you don't come to my side and I don't go to your side. Instantly, market allocation, and now that becomes a violation, okay? Now, when we're dealing with residential property, okay, as a broker or agent or whatever, do you guys believe that we can place a lien on a property if they haven't paid us our commission and we legally earned it? So again, if we legally earned it, but they refuse to pay us our commission, can we place a lien on the property? Do you think it's a yes, a no, or a maybe? Or it depends. Let's go back to what we were talking about. So I'm going to repeat that again. If we did the job and we concluded the job successfully and we should have gotten paid, and for some reason or somehow we didn't get paid and we wanted to make a claim and get our money, our commission, can we place a lien on the property? Would that be a yes, no, or depends? Well, under this condition, it would also be depends. Because by law, in order to place a lien on a property, it must be in the contract that they signed. Otherwise, it will be a violation. So technically, the broker could not get paid and get hit with a violation if they put a lien on a property that wasn't in the contract or wasn't permissible based on the terms of the contract. Now, a lot of these contractors, like if you hire a roofer, a plumber, an electrician, and you don't pay them, yes, they're going to put liens on your property, but the reason they can do that, because if you read the contract that you signed prior to their services, it has to be included on there, otherwise they can't. And it always is. So if you ever, any of that happen, read the contract in detail and you're going to see that there'll be a clause saying that if you don't pay them, they have the legal right to put a lien on the property. Okay? So keep that in mind, because we as agents cannot put any liens on any property unless it's in the contract when it was signed. All right? And then lastly, we have kickbacks or rebates. These are what we call referral fees. Now, usually referral fees are a no-go. No kickbacks, no rebates, none of that stuff, unless everybody in the transaction is aware of every little detail and everybody is in accordance, then you technically can do it. Now, if let's say you're an agent and you have an active license, now you can do rebates and referral fees as much as you want because both parties have a license. So technically, once you get your license, you can technically call me and say, hey, would you do a 50-50 deal and teach me this stuff or whatever, and we'll split the commission? Theoretically speaking, yes, we can do that, and I can get a referral fee because we're both active licensed agents. But if it's just somebody like a customer or somebody you want to give a referral to because they send you a client or a customer, you cannot do that if they don't have a license. So that's what they mean by illegal. So if your friend was to send you somebody and they're not licensed, legally you cannot give them any kind of compensation or anything of value, because that is considered a rebate or a kickback. Okay? So just make sure you deal with active licensed agents and you'll be good to go. Okay, guys, so that's going to conclude the section on escrow accounts. Okay, so that's going to be the second main section of this chapter. And now we're going to start with the business entity section of this chapter. All right?